Hello everyone, welcome to the SBI Securities weekly wrap podcast. First of all, here's wishing everyone a very happy Republic Day. For the week, it was a truncated week with only 3 trading sessions, but there was plenty of action with the earnings season in full swing. The market closed lower for second week in a row, led by profit booking across the verticals. Banking continues to see pressure after weak results from HDFC Bank and as well as other banks. And despite global cues being supportive for markets, FIS continued to sell in the Indian markets, while DII support was not enough to support the market. Talking about indices, the Nifty and the Sensex ended with cuts of 1% each. The mid cap index was down 1.7% for the week, while the small cap index marginally outperformed, ending 0.6% in the red. The week was largely stock specific with the earnings season in full swing, as well as sector specific stocks such as railways and renewable energy were in focus. The government has announced a massive program to build rooftop solar power projects for 1 crore houses. So, as a result, power and renewable companies, especially those specializing in solar, registered strong gains. Also, results from the two-wheeler majors Bajaj Auto and TVS Motors were strong, and it helped the auto index end the week flat. In stock specific news, Sony terminated the deal with Z Enterprises, which led to Z Enterprises stock tumbling 30% in a day and soured the sentiment on the street. And this saga continues with Z Entertainment again planning of taking legal action. Talking about sectoral gainers and losers for the week, so BSE Power and Healthcare indices ended with gains of 1.5 and 1% respectively, while most other indices ended in the red. Among the major loser was the Realty Index, which ended 4.4% lower in the week, and it was largely impacted by the weak set of results from real estate companies such as Oberoi Realty and Kolte Patil. The auto index ended flat, while the metal index too ended 0.5% in the red. Talking about top gainers and losers on the Nifty, so Bajaj Auto, Bharti Airtel, power stocks such as NTPC and Power Grid, as well as Coal India ended with gains of 3 to 5%. While on the losing side, we had Asian Paints, IndusInd Bank, HDFC Bank, Axis Bank, HDFC Life and HUL. So following weak set of results, these stocks ended in the red. Among key monitorables, so FIS net sold 7,846 crores in this week, while DII's net bought 6,227 crores. This is data as of Wednesday. The dollar index remained stable at 103 levels, but Brent crude gained in this week, so was up 5% for the week and is now hovering around the $80-81 mark. As I said, it was a very stock specific week, and with the result season in full swing, so we had quite a few major results in this week. Among them was Axis Bank, so NII was up 9%, while the profit growth was up 4% YOY. Loan book was at 9.3 trillion rupees, a growth of 22% YOY, while the deposit book stood at 10 trillion rupees, was up 18% YOY. United Spirits also reported good set of results, so revenue was up 8% while the profit went up 38% YOY and the margin also expanded to 16.4%. L&T Finance, so the profit grew 41% YOY and the retail loan book growth stood at 31% YOY, while the net interest margin also improved 160 basis points YOY to 8.8%. So strong set of results from L&T Finance as well. Tata Elxsi, the revenue was up 3.7% on a QOQ basis and the profit was up 3.1% on a QOQ basis. The EBITDA margin dropped marginally by 40 basis points QOQ to 29.5% due to higher costs and lesser number of working days. Havells India reported a disappointing set of results. So revenue growth was just 7% YOY despite it being a festive quarter, and profit growth was also 1% YOY. And the margin declined to 9.8% versus 10.3% YOY. So consumer demand continues to be weak, and so Havells India reported a weak set of results. In the power space, JSW Energy reported strong set of results. So revenue grew 13% YOY and profit growth was at 24% YOY. Bajaj Auto reported a very strong set of results. So revenue growth of 30% and profit growth of 37% YOY. Domestic motorcycle volumes were up 44% YOY in Q3, it being a festive season, and EBITDA margin also improved 100 basis points YOY to 20%. So very strong set of results from Bajaj Auto. Also, results are strong for TVS Motor as well. So sales growth of 26% YOY and profit growth of 68% YOY. And the EBITDA margin also at 11.2% was the highest ever. So very strong set of results for TVS Motors as well. In some stock-specific news on the order book front, so Mazgaon Dock Shipbuilders, the company received an order worth 1,070 crore with the Defence Ministry for the construction and delivery of 14 fast patrol vessels for the Indian Coast Guard. So defence orders continue in full swing. Also, Coal India was in focus. The company and BHEL will invest up to 11,782 crores in a coal to ammonium nitrate joint venture project in Odisha. As also, it will invest up to 13,000 crores along with GAIL in a coal to SNG JV project in Bengal. So, new energy theme also continues to be strong. This week we have given one call in pick of the day, which is Excelia Solutions Limited, with a price of 1825 and a target price of 2007 rupees. This company is a IT services company offering end-to-end digital transformation services to the airline industry. So it has a client base of over 250 airlines and provides the services to 400 distribution partners worldwide. And global air passenger traffic is recovering well and is within touching distance of its pre-pandemic levels. So in international travel, it is close to pre-pandemic levels and has crossed pre-pandemic levels in domestic air traffic in many countries. So air traffic is recovering, and Excelia Solutions is a indirect play on the airline and the travel industry. The earnings of the company has also recovered after a setback during the COVID period, and the stock is trading at 21.6 times trailing 12-month December 23 earnings. So quite attractive valuation as well. So coming to next week, it is going to be action packed. So the result season will continue to be in focus, as well as there are plenty of events. So first up, on 31st Jan, we'll have the economic survey of India being presented. Uh, we'll also have the US Fed meeting on 31st Jan night. So our markets will will react to that on 1st Feb morning. The interim budget, this time the budget will be a vote on account as India is headed towards the general elections. So on 1st Feb we'll have the interim budget, and this time being a vote on account, expectations are less, but again market will focus on the capex as well as the tax collections numbers, and what numbers could be expected for Feb and March of FY24. So that would be in focus. Then also we'll have the inflation numbers for Jan from the Eurozone. Jan auto sales in India will be in focus. That too we'll be getting on 1st and 2nd Feb. The monthly business updates from individual companies will also start flowing in on 1st and 2nd Feb. The India manufacturing PMI numbers will be out on 1st Feb. The core sector data also will be out on 31st Jan. So plenty of macro as well as micro news to be kept in focus next week, and it will be a very event heavy week. So this was all about the weekly market podcast. Thank you for listening. Have a great weekend.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.